Welcome back to Instables, everyone. Happy Saturday. I hope you guys are having a blessed weekend. Again, as we sit on a pullback after a gap up from CPI coming out lower than expected. Again, on a pullback, will we possibly continue on with this pullback? Possibly retest our 8-day here for any possible continuations on higher. I'm going to go over exactly what we're looking for from here. Hit the like button if you enjoy, subscribe if you are new to the channel, and if you are a day trader, if you're looking for pre-market news, major volatile movers like we mentioned here with PRFX, looking for a possible continuation on confirmation, mentioned this on a spike under $10 here, a very nice spike that we had in continuation, over a 60% breakout on the day. Again, one of many movers that we mentioned throughout the week. Go to instables.com in the description below, and for only $15 a month, you will never miss a breakout alert throughout the day again. Let's jump into this one. So jumping into the SPY with you guys here again, looking at our daily candle structure as we anticipate what we're looking for going into this next week. Again, as we sit on a pullback here after a gap up, what we are cautious of is any possible continuation below our close here at 449, 450. Again, our key resistance that we mentioned that we would not be heavy to the upside with if we did spike above, and we would have that possible intraday pullback here from, and that's exactly what happened. So again, if we do possibly jump back above 450, we could possibly overextend higher, sure, but in my opinion, continuing to look for any possible short below 450 will be plausible here in my opinion. The reason why is because our 8-day is curling over here. We are leading into our next Fed rate hike into the next following week, and with that said, in my opinion, looking for any possible bearish candle structure as we overextend higher here will be key. I know that we just got our increase in buy pressure, continuing to increase in buy pressure after decreasing in sell pressure that we have been keeping an eye on. And now with our 12 continuing above our 26 that we mentioned from a couple days ago, we were curling up looking to see if we can cross higher here, and we have been continuing on higher thanks to our decrease in CPI. Now looking at our weekly candle structure will show us where we may be headed leading into this next week. And in my opinion, with a gap up here, we do need to consider that we have possible consolidation to come. Even if we do overextend, that we would possibly have a wick to the upside and a possible pullback here as we lead into our next Fed rate hike the next following week. So again, in my opinion, we do have a possible pullback that is plausibly coming at some point soon. And in my opinion, our 450 level is going to be very key. If we happen to continue on below 450 into this next week, again, we have our 447.50 key intraday level that in my opinion we could gap and continue on below, in my opinion, if we did continue on lower. So again, our 447.50 level will be that continuation on lower to retest our 8-day moving average. But again, as we have an overall picture of bullish momentum, we want to make sure that we are cautious on playing to the downside, even short term, as we do lead into data. So again, back to our weekly candle structure, sitting on a gap up, definitely cautious to the downside here. But if we do continue on below 450, below that 447.50 level, in my opinion, we could have that continuation on this pullback. Again, leading into our Fed rate hike into the following week. Currently increasing in buy pressure on our weekly MACD. Definitely cautious to the downside, but very much considering that a pullback is plausible and that we do need consolidation after a gap up, just like we had prior after a gap up. Looking for more proof of concept will be key here. Now looking at our monthly chart as we lead into this next week, leading into our next Fed rate hike, we do have possible room to the upside. Our prior major gap down that we had here at 453.50 would be that possible retest. But in my opinion, even if we did continue on higher on a possible retest, we would look for any possible wicks to the upside, any possible major pullback on a possible retest on our 8 monthly moving average that we still do need, since we have not crossed back above our 21 monthly moving average yet. So again, that's what we're looking for here. Any possible bearish case scenario on a pullback will be those larger reaction moves. Any overextension higher will be looking for any possible bearish case scenario. Again, even if we overextend, like I said, even continuing back lower below 450, below 447.50 will be that possible cool down leading into our Fed rate hike into our next week. So again, that is what we're looking for, in my opinion, from here. Now, again, with that said, if you are a day trader, if you're looking for pre-market news before market open, major volatile movers like we mentioned every single day in the Instables room, our major runner of the week this week was ELOX. Mentioning ELOX from pre-market at $5.98, continued on higher above our $6 psychological level here, all the way to $9.89 on the day, just below our $10 psychological level, continued on above that psychological level later on in the day, up to $12 into extended hours, over 100% on the day overall. A very nice break that we had above pre-market high. Any major mover they want to be watching, any key level that you want to be watching on major movers, go to instabulls.com in the description below. And for only $15 a month, you will never miss a breakout alert throughout the day again. And again, all of you Instabulls, I appreciate every one of you guys for supporting the channel. I will be going over the market as always tomorrow as we lead into the new week. Looking forward to going at it. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in the next video.